Here's my bold prediction, John. Nothing will happen on the policy side.
Hi, everybody, and Happy New Year. I'm Jonathan Lawless, and welcome to 2026's first episode of Housing Insiders. For our new listeners, this is the podcast for founders, builders, lenders, and regulators, and anyone who believes that everyone should be well housed.
I'm Jeremy Potter, and when we launched Housing Insiders in 2024, our goal was to share what was really going on in the housing space. We wanted to bring you smart conversations. We wanted to talk to the people in the know. And we wanted to combine those with actionable ideas that you won't hear anywhere else.
Hey, we've had a lot of great episodes so far. I think we're getting close to 40 episodes total, which for most podcasts, that's a huge record. But I want to say 2025, we had a lot of great episodes. Jeremy, kind of curious to get your views. I mean, we spoke to innovators. We talked to the founder of ModX, Vesta, Villa, Inspectify. What was your kind of big takeaway from 2025 and all the episodes that we did?
Yeah, John, one of the things I was really proud of was how much the episodes overlap or intersect. You know, what we've been trying to talk about a lot on Housing Insiders is exposing different parts of the housing ecosystem and industry to each other. So we actually have a better understanding of what lenders care about, what builders care about, what policymakers care about, and the perspectives of each and how they relate to, you know, hopefully who's listening, their job, their goals, their understanding of housing. And I felt like that really happened. And what I mean by that, whether it's ModX, that, you know, when we talked to him, or Sean at Villa, Josh at Inspectify, you know, we heard a lot of the same things coming out. What if we really focus our attention and resources on the talent in home construction and renovation? What if we really focused on the digital data that needs to flow from a contractor, builder, inspector through to a lender in Vesta? And what, Mike, you thought that technology and AI could do. And so all of those things kind of in the infrastructure of the industry kind of then flowed up and were really supportive of what people like Jim Parrott and Bob Walters told us need to be happening at kind of the macro level that would really change the experience of housing for consumers, home buyers, and homeowners. So the fact that it all interrelated in a really kind of cool way, I think, was one of my big takeaways from the year. How about you?
Yeah, that's a great point. It's kind of interesting how many times we referred back to things that other guests said on later episodes. You know, definitely Bob Walters, Jim Parrott, Mike Yu was one that I think we quoted like 10 times in subsequent episodes, just because he had such a great insight in terms of, you know, technologies that lenders are using and whatnot. But, you know, even I think one of my takeaways, and there's a famous quote from Bill Gates that says, people overestimate what they can do in 1 year and underestimate what they can do in 10, is, you know, we've watched this game for a long time, and it's interesting to watch it evolve. And it's never, I mean, 2025 was not a year in which we saw really groundbreaking innovation or changes in our business. But we did see, I think, the sort of slow, constant evolution that's going to result in changes that, if we take a big step back in the 10-year picture, things are going to look real different. So, I mean, new LOSs, I should say, loan origination systems, new ways to build, you know, certainly new ways to originate, new ways to do inspections. Like, all of these things are slowly changing. In the year, it doesn't feel like it's very fast, but I do think that it is changing and will have impact. It's just not the kind of, like, those of us who are really impatient to see big things happen all at once. Ever since the launch of ChatGPT, I don't think I could really name one of those things since that happened.
Yeah, that's right. Impatience is a great word for it, because that's the word that sprung to mind for me too. I always thought of it and tried to lead the teams that I led with a healthy impatience, you know, as opposed to a disruptive impatience. But the point is that we do want to push this forward. We do want to see more change more quickly, and the housing industry is notorious for really slow or no change. So the fact that we're seeing incremental change means, you're right, this year is foundational for the years going forward. So it'll be exciting today to talk about 2026, of course, but to look back and say, you know, this could be one of those years that we point to 3 years from now and say, wow, that really set up what we're experiencing now. That's exciting to think about.
Yeah, I agree. I mean, I was listening to our prediction episode from last year for our predictions for 2025. You know, I think the things that we thought would be major issues didn't really actually turn out to be as big as I thought they would be. Like, for example, for those of you that remember the end of 2024, the biggest issue in housing, at least the one that we saw coming, was the cost of homeowners insurance and what we'd have to do in reaction to homeowners insurance. I don't know. Maybe it's because we didn't have as many hurricanes, or there wasn't. I mean, there was the fire. I mean, I don't know. It didn't seem like insurance, or at least not solutions to the insurance challenge, or defaults resulting from insurance costs. Those didn't really seem to materialize as much as we thought they would. Or maybe I'm wrong.
My gut is telling me that kind of directionally the same thing, which is I don't think that we solved anything, but I don't think that the prices either skyrocketed or that the HOI providers pulled out quite as dramatically as they threatened to. So if I remember correctly, the threats to pull out of markets was pretty dramatic, especially at that time. And either we took our eye off the ball because there was another shiny object and there's still a crisis going on that we've just moved on to other things, or what I think you're saying is more likely they were threats and it kind of simmered down a bit, even though we haven't solved for the cost, even though we haven't solved for the long-term risk. We also didn't see the dramatic problem that a lot of people predicted.
Yeah, agreed. I'm going to ask you. I want to ask you a very general question that is unplanned for, but I'm kind of curious to get your answer to this. Right? You and I care a lot about housing innovation. Our jobs somewhat intersect with that, but a lot of the innovation we talk about is not our job per se. We just care about it. I mean, Jeremy, if you had to sort of say, like, what's your motivation here? Like, what excites you about housing innovation? Why are we talking about this when it doesn't have anything to do with our jobs? I'm just curious to get your thoughts on it.
Yeah, I think the thing that initially drew me in when, you'll hear people talk about their passion is like they got the bug or whatever it is, whether it's a hobby or something that they're really interested in. And I think my answer is the challenge was so daunting and there were so many failed attempts over the years. I can even go back, John, and I'm sure people bring this up to you all the time too. And it goes even further back than this, but like Buckminster Fuller was trying to create a new type of house out of the metal from airplanes and the metal from the World War II production lines. When they stopped producing war materials, it was, can we use these same facilities to produce a house? It goes that far back without really a fundamental change to the construction of the house, the actual house itself. And then when you think about all of the exciting technology things we've experienced as consumers and that we talk about it, consumers holding these powerful computers in our hand, seeing things delivered right to our door, all the things you hear about every day in pretty much every industry, but of course, housing, and then really not seeing it really change a person's trust or experience in buying a house. Those two things are such big challenges that it really got me exciting. Like the thing that's going to break through here is going to have to be really passionate people who don't give up. And to be one of those people felt like I was creating a family, an island, a team that we're all on. And so even though it's not our day job, as we've added friends and colleagues that have become friends to that battle, it has gotten even more inspiring, despite not seeing as much progress as maybe we had hoped 10 years ago. To find ourselves here now, it feels like we have more friends than ever before. And that keeps me going. And the size of the challenge keeps me going, that it's just so fundamental to people's lives and the economy. And so those two things balance each other out and keep us, I think, keep me from giving up. How about you?
Yeah, no, that's a fantastic answer. In some ways, I think a lot of our listeners at Housing Insiders are people that similarly feel that challenge and feel that sort of sense of community with people that are fighting this challenge. And so I would add, the only other thing I'd add to that is sort of a sense of civic duty. I've been thinking about the famous John F. Kennedy quote about don't ask what your country can do for you, but what you can do for your country. And I sort of want to replace that with like housing economy. Like, don't ask what the housing economy can do for you, but what you can do for the housing economy. Like, a lot of times we talk about the housing economy like we're victims of it. And the fact is, we're not victims of it. And everybody that has true civic duty, who feels passionate about being a member of this country, of this community, like, we should do something about this. And we have the talent and ability to. Now, I know it's hard for a lot of people because we also have jobs, and talk is cheap, of course, which is a bad thing to say in the middle of a podcast. But at the end of the day, like, the community you're talking about are people that actually go and do things. And I think it's fun to be a part of that community. And I just encourage all of those Housing Insider listeners to feel a part of that community, continue to be involved in that community, but grow the community. The more people we can have involved in some of the ideas we're going to talk about in 2026, I think that's really important. But anyway, Jeremy, great answer for that sort of a surprise question for you.
No, I appreciate that, John. I think if we can create the kind of digital community, a lot of times industries have an epicenter. And if you want to be in tech in the early 2000s, you had to literally move to San Francisco. If you want to be in finance, I think you still probably want to be in New York or London to some degree, especially earlier in your career. And I think what we're trying to do is say, while there are certain epicenters of housing or lending, if we can create a digital one where people can come here or come to you, to all of us, as we try to solve these problems and then bump into each other, for lack of a better way to put that, we will discover things we never would have discovered otherwise. And so hopefully you'll keep listening and sharing this, not because we want the promotion and the numbers, but actually because it will help somebody hear something that helps you and helps us. And we all kind of put that solution together. And I think that's the motivation here.
Yeah, awesome. All right, that's a great suggestion for our listeners and for ourselves as New Year's resolutions. But as we sort of pivot to 2026, Jeremy, I'm kind of curious. Do you have any personal resolutions? 'Tis the time of year to sort of make sort of big changes in your life. Anything that you're thinking about?
Well, I'll bring up two. One's actually kind of boring and really cliche, but it's worth mentioning. I read a lot articles. I read a lot digitally on screens, and so this year I noticed that I've just missed the novel. Like I missed holding a novel and reading a novel. And as cliche as that is, I got a few for Christmas that I'd asked for, and I already started the newest Dan Brown novel. So nothing too deep here, but just like fun action packed fiction. And I think this year I'm going to really try to tackle more fiction and hold it and read it. And so I missed out on that a little, even though I read a ton last year. It wasn't as fun. So it'll be more fun this year. I think the other one is more work related. I've been consulting, as you know, for about 2.5 years, ever since the last startup that I had didn't make it, and I've had an amazing experience. And I'm really starting to turn my attention to problems I can roll up my sleeves and work on directly. I have some great projects I'm working on with clients, but that process of saying like, what could be the next thing? It always takes a while, especially when you're working on these big wild ideas. Those can require a lot of help. But I don't know. I think 2026 might be one where we start to refine what I'm working on personally for like you said, outside of the Housing Insiders world. So we'll see what happens there.
That's really exciting. I wish I knew what the answer to that question was, so I can make a prediction that that area of the industry is going to have some radical change this coming year. It's so it's funny that one of my resolutions is basically the same as yours. But as you know, I'm a bit of a nerd. I went to college and I studied philosophy in my undergraduate, and spent a lot of time reading classics and learning ancient Greek. And I've gotten pretty far away from that. There's been a series of novels that I've been wanting to read my whole life, honestly. And I think this is the year I'm going to buckle down and actually do it, which is the entirety of Marcel Proust's Remembrance of Things Past. For those that don't know, Proust is, widely regarded as one of the best writers of all time. He wrote a 3,000-page 7-novel series, which is really sort of about memory and the way that our existences and our minds are sort of an amalgamation of all of our experiences, past and present. He has a lot of interesting, philosophies on time. The novel's actually really great. It's just he's also known for having written the longest sentence ever in literature. Sometimes it can feel like a slog to read, mainly just because it's long, but it's very beautiful writing. So anyway, I am going to tackle the entirety of that series in 2026 is one of mine. And my other one is just a simple fitness goal, which is I've been cycling lately, and I know a lot of our listeners are cyclists. It's really fun. I've really been enjoying it. I think this year I want to do a century ride, which is do 100 miles, 100-mile ride. I don't have any particular time goals. Just get out there and actually be a part of a race and do 100 miles would be really cool. So that's my other one.
Great. I think that'll be fun to check in on and see how the progress goes on scheduling the 100-mile ride. And then at the end of the year, getting that book review and finding out what you discovered from it. So we'll keep those in mind for 2027 prediction episode.
All right, fantastic. Well, let's turn our attention to the industry and what we see in 2026. I always hesitate to make big bets on 2026, but that's really fucking boring for a podcast episode. So I've sort of committed, like, I'm going to try to stick my neck out a little bit here and make bigger bets than what I typically do. But Jeremy, I'd love to start with you. Let's start with just lending in general. What are your big predictions for what happens to the world of lending in 2026?
My first prediction is technology related, I would say, and that is the pendulum that swung into AI. It's not necessarily going to swing back in the sense that AI didn't work. I think AI is going to work, and I think it's going to be incredibly powerful. But I think it's going to be matched with data science in a way that we haven't been talking about yet. So, my prediction for lending in 2026 is actually about propensity. We're going to start using AI, feeding it the data that we have on customers or prospective customers or leads, and getting much sharper on who's in the market, why they're in the market, and for what reason, and what's their likelihood to transact or likelihood to do something. And I think that's going to be because companies have gotten comfortable enough with AI that they can feed data into it and now start to get really sharp insights back out. We focused on data science a lot 5 years ago, 4 years ago. Who's your chief data officer? Who's your data scientist? What's your data? How are you recruiting data scientists? Then we shifted real quick to AI. And I think it's going to kind of be a merge of the two in 2026. And so my kind of word of the year for lending in 2026 is propensity. What is the propensity? And that'll be a really interesting kind of marriage of AI and data science, I think.
I think that's amazing. Let me just make sure I fully understand what you're thinking about, because there's a couple ways that people have talked about AI and lending. One way that I don't think you're talking about is AI making credit decisions, or lenders finally getting comfortable with AI having the final say on whether or not a loan should be approved. You're not saying that's going to happen. What you're saying is that when a lender gets a phone call from a customer and the customer says 5 words, suddenly AI is going to tell that lender the next 5 words that that customer is going to say, and then the 10 things that lender should do immediately. And basically, if you have millions and millions of phone conversations and data and records of interacting with customers, you're going to be able to really quickly assess what those customers' needs are and more quickly address. Is that kind of the what you're thinking about?
Correct. I don't see it happening under the hood on some of the fundamentals of underwriting, like you said. I see it much more around the ability to focus marketing resources, sales resources, customer service, customer success resources on exactly the right people at the right time, to your point. And I think that means in the conversation, just the way you described it. I also think it's going to mean, and this will take a little more maturing throughout the year, but I also think it means proactively reaching out to someone before they call you as well and saying, hey, based on what we know about you, you might be interested in this. The same way we've seen for kind of smaller consumer purchases, people like you, like this is a pretty popular one in other types of consumer industries. And I think we'll start to see it in real estate and mortgage, particularly lending, where you're in the database. We can enrich that data with other data partners, proactively reach out to you and say, have you been thinking about this? And it turns out they were, because we've gotten much better at that than the massive blast to everybody who did a mortgage in 2022,
Yeah.
for instance.
So somebody we know really well, Peter Bannister, a friend of ours, who's gone on to sort of work on a company called Moda, has been doing a lot of this on the servicing side, at least just not on this in terms of like predicting before you have a conversation, but predicting during the conversation what types of things that you can do. Certainly, as Built, the company I'm working with, is getting more invested in the servicing space and has a huge amount of consumer data. I mean, being able to identify propensity before somebody even calls in to make that request is something that's big. And then the last thing I'll say too, Jeremy, you and I have talked about this, and I've joked about it a lot. But the use of AI as a companion, as a sort of interfacing sort of tool. Now, I'm not sure if this is the direction that you're going, like, but I think AI conversations have gotten so good. It would surprise me if we don't start seeing some of the initial intake being done by an AI assistant versus a human. I don't know. Would you be willing to go that far?
Yes, I would. My advice to the lending community is twofold on this. One, do not build this yourself. Lenders are famous for saying, oh, we have to build our own version of X because the belief is mortgage is so complicated or lending is so complicated. I promise there are companies like Mova, but others out there that this is their whole job. and they're doing it. So it's how you use this. Do not build it yourself. That will cost you too much in this environment. And then, two, John, I really believe that the AI assistants need to identify themselves as AI assistants up front. Faking humanity is driving people crazy and it's unnecessary. You do not have to pretend that it's a person. When you call somebody, just say, I'm John's AI assistant. I'm here to help. We can save you this much time if you do these things. You can also wait and talk to John, but I can't promise you it will be today. What would you like to do? I don't
Yeah.
understand why we continue to pretend that AI is human. Just say it's AI and then give the person the opportunity. If they choose to talk to John the human, they will understand a 48-hour delay because they picked it. They were incorporated into the decision. So my advice for lenders is don't build it and incorporate the customer into the decision. It's fine to use AI. Just tell them you're using it. It's all good.
I love that point. I'll say, like a lot of the call centers have tried to evolve to where the call center sounds more human or as a chatbot. Like I call Bank of America, "Hi, I'm Erica. Can I help?" And it's like you are a fucking bot. And
Right.
but even more importantly, you're not going to be able to answer the questions I'm asking because you have 7 options. And unless I say one of those 7 options in whatever I say, you're going to be, I need to call it like, so my first thing is representative. You know what I mean? But I think probably more of the big challenge with AI is I think I'm going to quote Mike Yu. At some point, people are going to realize that AI is better than humans. In other words, like you can talk to John, but he's a fucking moron because he does not have the entirety of humanity in his mind when he's talking to you. But I do. So if you really want a question answered, you better talk to me or the AI version of John. And I do think that some personality to it is going to be important down the road. But anyway, my main point is the consumers need to get comfortable with it and not feel like I'm going to talk to something and it's going to give me the runaround and I'm not going to get my question answered. And that could happen because of all the stupid regulations that we're going to put on AI. Like you can't talk about this and you can't talk about this. So you're going to get an AI person on the phone. And the first thing they're going to say, I am sorry, I can't talk about that because it's illegal for me to do so. So I'm going to, and then when consumers have that experience, they're just going to hate it. And it's going to ruin it for 5 years. Maybe this, if I were to make a prediction, that's the first thing that's going to happen is like, we're just going to mess it up because we're not going to think about it the right way and consumers aren't ready for it. And it's going to set it back a little while.
Yeah, there's no reason to think that we're going to suddenly learn how to adopt change in a dynamic and proactive way when we've not done that with any other technology. So I think you're right on that, unfortunately.
Built Rewards is a payment platform for housing that rewards members in their home and neighborhood. Built is the payment platform for over 5 million units because Built provides incredible value to residents and to property owners and managers that use it. Properties using Built have seen reduced turnover, increased usage of electronic payments, and fewer missed payments. And with our latest resident loyalty program, Built is changing the way that property managers can reward good behavior. Managers can assign rewards and benefits to tenants for a variety of activities like early lease renewal. If you're interested in learning more, go to alliance.builtrewards.com. So I'll give my prediction in the lending world. I'm curious to get your take on it because it's associated. But business has been slow. Business has been slow for a while, and yet we haven't really seen any major lenders bow out. We've seen some consolidation. I think it was Bayview that acquired Guild, but we haven't seen a lot of consolidation. We've seen the vertical consolidation of servicers and lenders combining, but no big failures. So I'm starting to think that if AI is really as good as it should be, and servicers have such a one up on originations because they have such a customer database, or banks partnered with servicers, partnered with lenders do. Like maybe we actually start seeing like a big name kind of go, just call it quits or be, a significant acquisition or merger.
Yeah, I think you're right. That's something that, we've heard about in one way or another, probably since the mortgage crisis, at least since I've joined the industry. It is, we're going to see consolidation. We're going to see consolidation. And you're right. What we've seen has largely been like medium to small players combining to try to get bigger, or two people who were already partnered on servicing and origination in some way. I'm selling you loans, me, kind of getting together versus what you're talking about. And I think ultimately all these trends converging is going to be too much for everybody to continue as is. So I definitely think you're right there. I think the challenge that overall environment creates is where does the refinance business go? I think the biggest question for lenders who are not servicers expecting some percentage of their business in 2026 to be refinanced, my question would be, what gives you that belief? Why do you believe that? And if you have a strong assumption that you're using as your strategy, great. Then I can't wait to hear about it and I support it. But I haven't heard it yet. It's really the refi game is the servicer game, and they're getting to the consumer before you even have a chance to call them. So I think that'll be a really big question for a lot of lenders who count on some refinance business.
Yep. And I would say the same, we don't talk about multifamily probably enough on this podcast, but I would say that I sort of feel the same is probably going to be true of the multifamily space. There was a saying for a while, survive to 25. And then I've heard that recast as like, we'll be in heaven in 27. And nothing bad happened, not to office space, not to multifamily. Again, that industry has really been struggling. We've seen delinquencies go up in that space. Rents have been kind of flat, threats of rent freezes in New York. So it could be a pretty tough year in 26 for those in the multifamily space.
Yeah, I went back and forth on LinkedIn recently with a friend of mine, Mark Serbko, who's a attorney in New Orleans, Louisiana, and represents clients nationwide. And he was saying that on the multifamily side, we're seeing a lot of property managers, lenders, owners, they choose to make a deal on rent versus having vacancy, right? Makes sense. I'd rather have, stable rent or zero increase in rent. And the incentives to stay a renter right now, according to Marks, have never been stronger. So first time home buyers are in this tough spot. They're hearing a lot of uncertainty in the market, and they're getting great deals from their current apartment to not leave because the consistency of rent is better than the uncertainty of, can I fill it with that 4%, 5% increase that I'd really prefer on the multifamily side. So that was kind of an interesting thought is I don't hear lenders talking about competing with rent very often, but that
Hmm.
is what's going on. And I think lenders who think more about that will have more success in 2026.
That's a really interesting point. And you can only do that for so long in the multifamily space. But I guess, we're often surprised at how resilient some of these spaces are. Lender consolidation is slower than we think. Multifamily failures are slower than we think. And it's really just these sort of creative ways of limping along, just surviving. But you're right, that puts an interesting position versus rent versus buy, where landlords are competing for customers, and that makes a ton of sense. Let's pivot a little bit to predictions on what happens in the policy landscape on the lending side. You want to make any bold claims in terms of what we see this year? Now, I will note that this is a midterm election year. Republicans are facing a tough reelect, according to the data coming up in 26. So, necessity being the mother of invention. Are we going to see some real major policy changes to kind of help them position themselves for the midterms?
Here's my bold prediction, John. Nothing. Nothing will happen on the policy side. Now, I think there will be some product tweaks, right? I do think that, we talked in our last episode about a very specific supply side product that we believe Fannie Mae should be doing. I know we'll talk more about that in the new year. Obviously, our listeners will hear more about that. But macro policy stuff, I think the GSEs are really trying to stabilize the balance sheet and understand what it looks like to start bringing in private shareholders at incremental levels. And because of that, a lot of the focus will go there, and the other things will kind of be at the mortgage product level, rate sheet level here and there, but they'll be around the edges, and nothing material will change other than, at some point we will see private shareholders have a chance at 5-10% of each GSE. I do believe that, but that won't trickle down to being a major policy change for the lender originators that we're referring to.
Okay, hold on, because that would be a bold policy prediction if you thought somebody would be given a chance to own more of the GSEs this year. Do you think that's going to happen?
Yes, I think that will happen certainly by the end of 27, but I actually think a lot of the 5 to 10% level initial offering stuff that we've heard about, I actually thought it was going to happen by the end of the year, and I don't think it's going to happen today. So it's going to happen in 2026 to lay the groundwork for really major changes in 2027. So I guess if 5% of Fannie Mae and 5% of Freddie Mac counts as a major change, it'll definitely be a major announcement. It'd be a big press moment. Then yes, I'll take that. I'll have to withdraw my nothing to 5% of each GSE, but I think something like that is very likely.
All right, that's a big one. So, and I should note that today is December 31st. So we are standing at the very edge of 2025, looking out on 2026. This episode will air in a few days, so don't blame us if something happens on December 3rd that we didn't pick up on.
Or even at 5 p.m. on December 31st, you never know. We could see a tweet and the GSEs could be private by tomorrow morning. You never know.
That's right. Now that's a bold prediction. Okay, all right. So, all right. So on the policy front, my bold prediction is that something actually will happen. Well, first of all, I have to be optimistic about the proposal we talked about in our last episode around construction financing. I know the Treasury and I know FHFA and I know others are really trying to figure out what they can do on housing, and they have got to do something. There's been all this talk about 50-year and portability. We saw a ridiculous op-ed in the Wall Street Journal about a really convoluted way of making loans portable. Which, look, I'm never going to say it's good to have an idea out there, even though the idea is not totally workable. It's great to see people thinking about it, and I'd say the same about the 50-year. It's a terrible idea, but it's great that somebody's actually taking the time and willingness to put something out there. But they got to get their shit together this year, or else midterms are going to be a bloodbath for the Republicans. And housing affordability is the top thing. Now, it might be housing innovation in terms of construction, financing for construction, but it also could be something crazy on rates or MBS spreads, right? Because I think erroneously, the Republicans believe that lowering rates will be the key to getting housing affordability to be in a better position. I'm struggling with that because I just think lower rates get capitalized into home prices, but maybe not entirely, and maybe some major attack on interest rates, particularly for mortgages, would have a meaningful effect in making first time home buyers feel like they have something that they're going to get for it. I don't know.
I think you're right that the assumption is we will just push rates down and that will solve the problem. I think that's one of the reasons I really like the idea of a major supply or construction announcement. I think, the proposal we outlined in the last episode is fantastic, should happen. And I think it actually will happen. I was thinking a little bit more macro about the announcement. And that's why, I agree. I think they're putting a lot of eggs in the new Fed chair, lower interest rate basket. And my macro question that I think demands the industry think about this is what happens if that happens and people don't move? We keep talking about lower rates. And I even saw this Housing Wire article that was like, purchase mortgage applications are up. Why aren't we seeing any change? It's like, well, because mortgage applications for purchase make no difference to the
Right.
market unless there's something for them to buy. So we could pre approve the whole country. We could give every millennial and Gen Z a fucking pre approval, and it won't matter if
That's
they
right.
don't have anything to use it on.
It's like interest in Scarlett Johansson is up,
Yes.
yet not more people are dating Scarlett Johansson. Like, what's happening?
Yeah. It's like, and so I actually think the industry should prepare, at least have this in a binder on a shelf somewhere. What's your plan if rates drop to the low fives as everybody wants, and then homeowners don't move? We keep expecting them. Oh, that'll be the thing to get the gridlock unlocked, to get the lock-in effect removed. Is it? Are you sure? Because I actually don't know that free and clear homeowner, the homeowner that owns it free and clear, we have higher home equity than we've ever had before. We have uncertainty in where I would be able to move. Are the low fives going to move that person out of their house? Maybe a little, but a lot? I'm not sure. So I would really ask people to think about that. If we're putting all of our eggs in the lower rate basket and we're going to drive them down, what are you going to do if homeowners don't move?
Yeah. If you look at where the administration is right now, with a year left to the midterms, less really to sort of make a very clear position, what can they do that will have a rapid and immediate impact on how people are viewing the success of this administration? And I think their view is by lower rates, it's going to have to translate to affordability somewhere. We're going to lower the cost of, financing multifamily. We're going to lower the cost of whatever, financing whatever. That should translate to lower prices and translate in a reasonably short period of time versus, let's say something that we talked about early this year, we're going to open up federal lands for building, right? I think we all knew, number one, that the opportunity was there, but probably not there in the places people wanted to live. And number two, even if you do it successfully, it's going to take years to sort of get the infrastructure in place and the building to start and to argue about all these things to actually get it done. It's maybe a winning headline. You have the Secretary of the Interior and Scott Turner shaking hands and pointing to a big map of empty spaces and saying, we're going to build here. And maybe that's what they got to look at, just what's the headline. But the Fed decides to lower rates is a great headline, but I don't know, picks whatever. Zoning changes are encouraged by lowering guarantee fees is not. For most people, that's like, I don't even know what the hell that means. So I don't know. It's just an interesting year. And the president's got to be sitting there in the Oval Office thinking like, what can I possibly do to convince people that affordability is getting better in housing? I don't know that he has a lot of options.
Yeah, I don't try to think like a politician too often, but in this case, I will. And I think you're right. The more likely thing, Occam's razor, right? The simplest answer is usually the one. It's that I'm going to push down rates and I'm going to announce opening federal land. And then I'm going to be able to at least say, it's not my fault anymore. I don't know if that's true, right? That would actually create a change on Main Street, but it actually would be from a media perspective a lot to be able to say, here's what I did. Like now it's on you guys. It's on the private market. And so there is something there in at least the theater of it that I think we need to be ready for and think more about. So that's right, John.
Yep. Yeah, we can expect a lot more press conferences, which is like, despite what the media says, the economy is actually great and housing is getting way better. And there are certainly ways in which that's true. It's just to have an impact that people can actually tangibly feel. I mean, remember, most people aren't first-time home buyers, right? So it's like, how do you get people to actually feel like things are changing? It's a real challenge. And you got to get a headline. You got to figure out how you can convince people that, hey, this is changing despite what CNN tells you, and we'll see. Anything else you want to sort of posit for what's happening in the sort of lending ecosystem?
I have one that will kind of bridge lending into real estate in a way that I'd like to talk about, and that is kind of the digital wholesale broker. And I also think of it as a digital wholesale lender. I think in 2026, we're going to see a much what I'll call kind of thinner and more dynamic and efficient wholesale lender that is helping the mortgage broker with tools. And here's why. I've been thinking a lot about comparing LEs in a purchase contract for traditional lenders. So not wholesale lenders, retail and these big kind of incumbent lenders. And nobody I know shopping for a house wants to give up their personal financial information 3 or 4 times. It is a pain to get it all together. It's a pain to submit it. You have to put in a lot of usernames and passwords if you're using digital tools. You have to get together a folder of all your PDFs. You got to scan stuff. You got to email stuff. There's portals involved. It's still bad. It's still hard. It's still painful. So, as a result, we don't shop still for a good mortgage deal. And I think there's 2 things that are really bringing the market down that might see a little change in 2026. One is I really only apply for one mortgage when I'm going to buy a house because I don't want to go through this a lot. And by the way, even if I wanted to, the pricing on those LEs aren't that different anyway. It's all GSE pricing. It's all coming from 4 or 5 places, UWM, Rocket, NewRez, etc., PennyMac. So the pricing's pretty even. Now, a mortgage broker will tell you, hey, by comparison, I could do 25 basis points better. I could do 35 basis points better. 20 or 35 basis points to a first-time home buyer is not tangible enough. They don't understand that difference. And getting that difference, they're like, okay, whatever. Is it going to be harder or easier for me? What are you saying? Is it going to be a faster closing? Am I going to get the house? Like, what in the hell are we talking about? And so I think that's what we're going to see in 2026, real estate agents using more tools to get more clarity up front. And I don't think we're going to see more shopping. I think we're going to see less shopping. And I don't think it's bad for consumers. And what I mean by that is shopping has not benefited them for 10 years on the purchase side, on the first time homebuyer side. Shopping is not valuable enough. There is not enough of an incentive there to give up your information 3 and 4 times to get a notional LE that isn't even dependable until you get to rate lock anyway. And I think the biggest disservice we do is pretending that shopping matters when we all know we're giving out bullshit LEs. The industry needs to get super clear with real estate partners and search portals and the consumer of what price you can offer, how early you can offer it, and how it's guaranteed or not. The lenders that do that are going to win. And I think the digital tools that wholesale lenders are giving to brokers are actually far superior than the point of sale tools that retail has. My mind has been changed over the last year on this as I looked into more and more of the tools. And I think we will see the kind of digital LE, digital shopping tools get handed to real estate agents, get put inside of real estate portals this year. And it's going to fundamentally change lending and it's going to benefit realtors and consumers.
I think that is a really, really interesting point. I mean, it's a little bit cynical in the sense that this industry is slow to change. It's going to be really hard to compete. What are you competing for? Experience? Like people experience it once and forever. They can't compare it to another experience that they've never had. Are you going to compete on price? Well, yeah, but I mean, you're just delivering the same price that the GSEs are offering you. You're going to have maybe slightly different margins at different points in time. So, what are you really going to compete on? And I think some ways it's like if you can be first to the customer, you're going to win for the most part because you're going to lock them in. They're not going to shop you. And how do you get first to the customer? You go up the chain and you go to the realtors and you try to sort of embed yourself there. I think that while not incredibly different, I think you're right. The digital tools that brokers and others will have to connect to real estate brokers are going to get better. And of course, that was been a major theme of 25. We didn't even mention that at the start, is this sort of consolidation of the real estate shopping portals with lending, with servicing into sort of a fully integrated top to bottom system. And maybe like really what you're saying is like that integration now will start making its presence felt further up the funnel in terms of when you shop for a home. Is that another way to think of it?
That's a great way to say it. I do think that you'll hear like Rocket, for instance, Rocket Mortgage talk a lot about vertical integration and that the acquisitions of Redfin and Mr. Cooper kind of complete this vertical integration idea. I think that is really just an idea because it takes so long to get that into the market in a practical way. And that's what 2026 will be about. So we may not even see that really high up funnel competition until later in the year or 2027, but all of the actual inner workings of making that happen already are happening in 2025, will be happening in 2026, and probably we will see some major announcements in the fall, be my hunch, that some of those things have come even further along, whether that's a Rocket, a Zillow. There will just be a lot of up funnel hand-to-hand combat in 2026.
You know, what that also suggests, and we saw, at least in the sort of real estate shopping world, some interesting things like the RESPA case against Zillow, which is effectively saying Zillow realtors are steering people to Zillow lending, which there was some evidence to show that there were some benefits being passed on. I mean, RESPA makes it really hard for the full integration of lending and shopping to really become one. And I wonder whether or not we're going to see that edge be tested a little bit, and if we're going to see more lawsuits coming up, because it is really a challenge to sort of, as you say, let's have a broker embed their sort of pre-approval in a realtor's platform. Like it's going to be hard to get around the fact that that has some RESPA issue. Now, JVs are a different question, and you look at a company like formerly known as Guaranteed Rate, like they do a lot of JVs. You've got these major platforms, particularly Compass, if they acquire Anywhere, who I don't think has a major lending partnership yet. Am I right in saying that?
I would say it's not major in the sense of volume. I know they have a JV with Rate called Origin Point that I believe is still active, but I think it was more a test and learn, to be honest, just based on how much volume goes through there. So that's been their initial entree into that. I think you're right, though, that we'll see a lot more action the Zillows, the Compasses, the rates, Loan Depots, trying to keep up with the Rockets of the world.
Interesting. Okay, I guess the last thing I'll say about the real estate industry, and another prediction of ours from maybe 2 years ago, was that the settlements on, the sort of NAR settlements wouldn't have a major impact on commission rates. Interestingly enough, and I think our prediction was no, it wouldn't. The industry is undefeated in terms of being able to protect itself from any competition that would lower the overall, realtor commission rate. But interestingly enough, this year I think the average went up in terms of commission rates. Am I wrong in saying that? I think I read a headline somewhere.
I think you're right. First of all, you're absolutely right that the lawsuits had no impact in a negative way. And then the question is whether everything stayed the same, or that the attention on commissions actually made agent commissions more resilient. And I think that's largely true as well.
Yeah, amazing. So I guess I would not attempt to make a prediction about that. I think in some interesting way, the sort of combination of lending and the realtor space is a way of lowering commissions, and maybe hear my logic out here, which is if the commissions are sort of being shared as an incentive to consumers to choose a specific lender, use Redfin and you get $10,000 off of your Rocket, whatever. Again, the legalities, all these sort of things have to be looked at, but in some ways what's really just happening is the commissions just being shared back as a discount on the lending, and so commissions are going down, just not directly in the form of the commission itself. It's just being shared with other parties.
Yeah, I could see costs being spread out as a pretty common theme for 2026. It's like, hey, we're going to actually front load some of these fees or costs into the relationship that you most value, which is the real estate brand or the real estate individual, the agent, as you said. And actually, that will kind of get spread across, quote unquote, the whole platform. I could see that. I mean, I think that makes a lot of sense. The one thing I would say, if I was trying to be hopeful, optimistic, or bring my like product innovation mindset to what you said, the way I would try to deal with RESPA is Lending Tree 2.0. We haven't seen Lending Tree innovate really in a very long time, the lead gen space. I think the lead gen space where real estate and mortgage kind of fit together on purchase needs to innovate. And so here's what I mean. If I'm showing you my rate or my deal, and I really want to convert you, but I'm worried about the regulatory implications of RESPA, I think you need to do something that is akin to we'll show you our rates and the rates of four others, or we'll actually put competitive analysis into the platform itself. You're still going to pick ours, but we're going to give you enough information that's real and bona fide so that we don't have a regulatory issue. I don't see why we wouldn't sort of see niche lending tree, niche bank rate inside of other platforms. And I think that's really fascinating. And I think that has the potential to give consumers a more sense of ownership of their decision, pick the right deal, and also have lenders be confident instead of insecure about their offer, and actually move boldly forward and say, look, we still think we're the best deal, but we'll show you everything. And if you want some cut rate insurance, to quote Allstate, go for it, but you're going to want to stay with us. I think mortgage needs to look more like that and sort of give RESPA the Heisman from the beginning on clarity and transparency, instead of quietly under the hood trying to work around it. I think actually in this case you take a weakness and you make it a strength.
Yeah, interesting. I'll say maybe one of my bolder predictions, because a lot of the way you talk about this is sort of like a platform, like a search platform, a website, if you will. And we heard from Kristen Messerly several episodes ago about how millennials are starting to shop, and it's a lot of YouTube and it's a lot of Chat GPT. It was actually really surprising how quickly Chat GPT had climbed up the list. And so I'm wondering whether or not what you say actually happens, but it happens in a different way. In other words, it happens because it's being facilitated by a Chat GPT. And I know a few companies that are already looking for, how do I get leads from Chat GPT? When somebody goes and asks about something, how do I have it propose something to me? And I wonder whether or not that's where it happens versus on sort of a, like to your point, a bank rate website or a lending tree website. Maybe not so much, but that integrated with something like an AI platform is a different way of thinking about it. I don't know, maybe throwing out that the sort of generation that's coming into its home buying age is less and less so millennials who are sort of passing that age, and more so people that, were born holding an iPhone using Snapchat by the time they were 3. And that's a very different shopper. You will like this if, anyway, the sort of Instagram ad type of shopper is a different shopper. They don't go to websites anymore.
Yeah, I really like that as an innovation challenge to the industry, to our audience, which is you've already started to see Zillow trying to make inroads with Google because they don't want Google to put listings at the top of the search when you search an address or when you search for listings. Google started doing that, and a lot of people on the real estate side kind of panicked to see Google putting listings in search results. I would assume all these companies are talking to OpenAI about doing cool partnerships. So yeah, if I was at Bankrate, Lending Tree, Credit Karma, whoever, I would be talking to them too. How do we create something cool? How do we create a cool experience for consumers? And lenders aren't known for cutting edge tech. And so it's going to be these other platforms. It's going to be real estate. It's going to be Bay Area tech that are having those conversations. So I think that's a really good prediction.
All right, so we're coming up to the end of the episode, and we've got still a lot of areas that we can make predictions. So why don't we do a lightning round, Jeremy, if you're game?
Yeah, for sure. I have two lightning round, and then I'll throw it back to you. Maybe we can go every other. I'll do one, and then you go one. My first one is I want to see real estate start marketing supply differently. Now, this is more of a hope than a prediction, but I would love to see real estate agents really become early advisors on where is the house going to come from. And we mentioned the Fannie Mae proposal for single close construction of new houses. And what we learned from our exploration of 176100 was there's way more land and there's way more vacant and abandoned properties than we thought. And so my hope slash prediction would be, hey, real estate agents, start using that to counsel people really early on all of their options. Get in there and be an advisor and say, here's what you can see in our market. Here's what's on the market. Here's my coming soon that only I know about because I'm a real estate agent and I have the coming soon connections. And here's a third category that no other real estate agent is going to tell you about that I specialize in. We can just get you a house that looks like this, this, and this. I want to see marketing supply differently, meaning how are we going to get you into a home? I think if real estate agents become true advisors in that sense, then the commission is justified in a lot of ways because you go from having few or zero options to having more options, and that's valuable.
That's fast. Okay, very good one. I like that. All right, lightning round. I'll throw out mine, and it's not housing related, but it can be, which is the following. And I'll start with a movie recommendation. If you have not watched the movie Her in the last few years, go back and watch that movie. I think it's Joaquin Phoenix, if I'm remembering correctly, and the voice of Scarlett Johansson, who gets
Making
two.
her second appearance in the podcast. Yeah.
Fantastic. Maybe we'll send this to her. But it is a fantastically insightful movie, way ahead of its time, about AI companionship. And I think the AI companion and AI voice things are getting really good. They're so close to being so good that I think they will become common. Now it's still not socially acceptable for me to tell you, Jeremy, I have a great friend and it's an AI bot, but I do think it will increasingly become more common as it has in 25. But I think 26 will be the year in which it becomes common and it becomes profitable. In other words, like companies like Character AI and these other companies that are building AI companions will start getting really good at it, and they'll get embedded into hardware, into your iPhone, like some way AI companionship is going to make a big leap forward in 2026. That's my bold random prediction.
Okay, I'm going to rewatch Her, and then we'll watch that prediction in 2026. I have one that's, again, very hopeful and big in its ambition, but I would love to see states compete on issues, policy issues in 2026, and specifically housing. We need to bring back the states as petri dishes for federal policy that has so far gone away. And we finally, after 20 years, got federal policymakers and politicians to understand that housing is a national issue because it has economic impact on generations of people. That finally happened. That senators stopped telling Mike Kinsella from Up for Growth that this is a governor's problem or a mayor's problem. Now, Mike's been inside the Beltway working on exactly this, and you can hear that episode of Housing Insiders if you want to learn more. But I think states competing is a really big piece of how we move forward in housing. And we've got to have more governors and more mayors working with HUD and working with FHFA to say, I'll be the state that takes this on. I'll be the state that takes this on. We're seeing some states compete on income tax, right? In that more wealth income tax policy area. I want to see it in housing. And that would be a really fun change in 2026.
That's great. A lot of times people will mention state level changes, and I think the one that I'm always pushing back on because I hope for a federal solution, but it's around building codes. If states can really loosen up their building codes requirements and sort of make them consistent, they have a real chance of winning the offsite construction game. I think it could be a big win, and other states could try to emulate that. And the way that you do that is just create a friendlier environment for builders who want to build things a little bit differently. All right, I guess my last sort of prediction for the year is going to be another very bold prediction, and it's going to be a negative one. So I hate to end on this, but if you look at the consumer's balance sheet, it looks really rough this year. Debts have been going up, all types of consumer debts, and we just now are starting to see legitimately people's wages being garnished for student loans. I think I read somewhere that 30% of student loans are currently not being paid back. It's a pretty shockingly high amount. So you've got a lot of these sort of very sort of edge things like consumer situation, the question about whether or not the AI sort of investment has been a bubble. The stock market for some reason continues to go up, and everyone's like, what's happening? So a little bit of like queasiness in the crypto market. All of these things are sort of in a careful balance, and generally that always holds. It's like people predict something awful is going to happen, but it doesn't happen. But sometimes it does happen. And I think now there's just too many of these things that are balanced that any sort of shift in one or the other can become a real problem. And I think it starts with the consumer's balance sheet, and the issues of spending and cost and affordability just become too much, and consumers pull back, and that's going to pull everything else back. But that's my concern for 2026. I don't know if I'd be so bold to say it absolutely will happen, but for me, that's top of the list of like bad things that could happen that are fairly rare.
Yeah. I think that's worth mentioning because if you're a CEO trying to plan your year, for instance, I heard a comment the other day. I believe this stat to be really interesting, but somebody asked me if I thought it was true that decision makers they spend all of their budget in the first 100 days that they have access to it, right?
Huh.
I want to do all the planning. The reason I do all the strategic planning and the reason I make all these choices is because when I have access, I want to go. I want to put those funds to use. So I've done all the preparation, the money hits, I spend my budget, and then we work. And so if that's true, then I think that kind of says to CEOs in particular, you need to know that this trend that John's mentioning is real and that could happen because you got to be ready in case it does. Doesn't mean you have to plan your whole business around it. Doesn't mean you have to pivot, but you have to know that it's a risk, right? And I think of consumers a lot of the way I think of shareholders and investors. They love investing in future potential. Well, consumers love
Hmm.
are consumers optimistic? The reason we look at a consumer optimism index from the University of Michigan is because we want to know, are consumers optimistic? Are they as optimistic as investors? Now, consumers are hardly ever as optimistic as investors who are investing way more in future potential than real revenue, as we know. But that's the point. And so I think to flip yours to be like, what could we do about it? We have to create a path to jobs, innovation, and growth. If people see a path, they get optimistic and they can actually plan their career, plan their household accordingly. If they don't see that, and all they ever hear about is how horrible everything is. And I just think politically it matters. Politically it matters. If you're talking every day about how horrible everything is, consumer sentiment is gonna fall. Even if you say we're trying to fight it. Okay, great. But I'm still nervous because you made me nervous to try to tell me how great everything is. But I'm still nervous. So we have to give people a vision of growth, an income for their kids, and a career path for their kids. And if we do that, households will get more confident. If we don't do that, they won't. And that shrinking confidence, John, is what really scares the overall system, right? Because
Yeah.
that's less transactions, that's less movement, that's more savings, and that actually holds back our potential.
I'll end with a little reflection. I think it's such a great point, Jeremy. So I've read a couple interesting things this year. One about the building of the railroads, and actually just recently I was reading about the building of the Hoover Dam, which was something it really created the city of Las Vegas, but just a fascinating engineering task that took almost a decade. And in both of those cases, the railroads and the Hoover Dam, there were two things that were true of it. Number one is the means to get there were not always the cleanest and easiest. People died, people lied, people bent the rules to sort of raise the financing and the money to get these things off the ground. I don't mean to say that it's always got to be something bad. I just mean it's going to take real balls to get anything done like those two things. And by that, just like full on boldness and risk taking is kind of par for the course to create something that's going to really engage people's engage people in the way that they need to be, which is the second thing I'll say about both of those things, which is it sold people an incredible vision. The railroads were sort of responsible for people even thinking about time travel because suddenly it collapsed space in such an incredible way. So even though it was like a crazy risk-taking venture, it captured the minds of Americans in a way that I think very few things ever have. And that inspired people about jobs and the opportunities of the West. And the same thing with the Hoover Dam, just, it became a tourist spectacle well before it was even done because it was going to create such a massive, massive imposition on a massive wild river, the Colorado River. Anyway, so I say all that because AI is sort of in a similar situation. Like it's crazy the amount that's being invested, but the opportunities are huge. And that opportunity we need to see as not something that's going to take our kids' jobs away, but something that's going to create a future in which we're more productive, fitter, happier, more productive. I make a little bit of a music reference there. But in any case, I think there's an opportunity to really get people excited about what's happening. And housing can be a part of that too, as we always hope that it can also participate in that.
I really like that. I think that's exactly the type of inspiration we need right now. I'll just put a quick footnote on it. I think a lot about the millennial generation because I've jokingly, but also seriously considered myself an elder millennial. And as a result, I think back to, 9/11 was my freshman year of college. So let me just put that in perspective real quick. I left home, moved in, and 2 weeks later, 9/11 to then see the housing crisis and the financial crisis a couple of years after college graduation, and then to see the COVID pandemic when I started having kids, my friends started having kids, our wives had started having kids, etc. To see those things, I think put us in a position where we could go either way on cynicism versus hope, John. And so that type of inspiration right now for a group that's just starting to take leadership positions in politics and in companies needs to happen. And you were mentioning philosophy earlier. I'll just mention a book that's been sitting on my shelf for like years, and I just picked it up. Humankind by Rutger Bregman. Not sure if you've ever read this, but
Mm-mm.
it starts with Hobbes versus Rousseau. Is the world a cynical, miserable place and
Mhm.
you have to gird and protect yourself against all threats? Or is it a collective community where we have to look out for each other? Otherwise, we're no different than the animals, right? Like that is an interesting moment right now to be thinking about those two realities. Loved your comment and just hope that everybody feels inspired, not fearful after listening to this episode.
Absolutely. All right. So, Housing Insider is going to have an amazing 2026, but it's going to be amazing not only because of the great work and a huge happy New Year's to you, Jeremy, to our producer Caroline, to our editor Max, to our music provider Keenan. All of you guys are going to help us make this an amazing show. But our listeners are really critical here. And if you want to be on the show, if you have an idea for a show, I'm going to again encourage you guys to please reach out to us. We are going to get some seriously awesome guests. It takes a lot of energy and effort to make the show happen and happen regularly. So we want to make it the best possible show we can so that we go viral in 2026. And I think we have a chance of doing that. But it all starts with you, listeners. So thank you so much for listening, and please subscribe.
That's right. We air this show every other Monday, as you know. So that means 26 episodes in 2026. So that's what we plan to bring you. And we're really excited to make this podcast happen. So thank you for sharing. Thank you for listening. And we look forward to being back with you in 2 weeks.